Good morning to all traders and welcome to this Wednesday's Market Insights video on metals and energies. We're gonna see the analysis on gold, oil, silver, as well as the natural gas. All of them pretty quick, to be honest. Just revisiting the charts from the last week. We've all expected, we all have been expecting the 2000 on gold to be reached, but that was not the case. We saw massive profit taking yesterday, but it seemed like an opportunity for bulls to step back in. So for that reason, I think we might have another wave to the upside. Now, what we saw yesterday popping on the headlines, obviously we had the FOMC meeting started, right? So in the first FOMC meeting on Tuesday, the Fed decided to extend the lending facilities for another 3 months. That supported the dollar, right? So also, if you recall that the dollar has been really weak over the past few days, right? With euro dollar also reaching nearly 118 levels, 117.70 or something. Well, we were expecting to see some sort of consolidation on the dollar, some profit taking on euro as well, you might say. So for that reason, and because we are also expecting the FOMC meeting today later in the session, then we've seen the dollar strengthening it a little bit, and that is also ahead of the expiration of the jobless claims at the end of this month. So we are going to have a very, very important week closing on Friday, and as the White House still debates on a fiscal package. So I'm not going to take more time on the fundamentals. Let's just jump straight on the charts. Okay, so we've been looking at the gold price is moving, right? We did expect, to be honest, the prices of gold to actually do an ending diagonal over here and end around 1846 and then start moving lower. However, since this break, then we must see it with a different eye now. Multi-structural impulse to the upside. That's what it is. Now, we've done waves one, which is a leading diagonal over here, okay, and we've done a 3, and it looks like we've done 4 as well, because 4 is very sharp, 2 is a little bit more extended, and now it looks like we're going to have another move to the upside to take out wave 5, right? Now the question is, where are we going to go up to? Well, we do know for the Elliott waves, right, rules, that wave 3 can never be the smallest one, right? So since we've got wave 1, 2, 3, and 4 done, it means that wave 5 has to be smaller or equal to wave 3, right? Just a tiny bit smaller. So that takes us above the 2000, okay, and near the 2007 mark. So I'm expecting more upside. I'm expecting another move, since we've also seen this deep being a very good opportunity for buyers, buy the dips as we say. Okay, I'm expecting now prices to start moving higher. We do see some signals on the MACD, right, over here, and on the RSI, but that would be ideal if prices come here and then we do some sort of signal both on the RSI and the MACD to support the longer term pullback back to, well, I would be looking at levels around the 1668 first, okay? But do not forget that this could simply be a different scenario, right? Where we're not going to wave B up here, and which means that we're going to hit the 2000, and from there, the next level up could potentially be the 1618. Let's just actually quickly do that over here, and that would be, well, that would be around the 2340, right? So there is room also for more upside, of course, if we take this as an ending wave C rather than a corrective wave B. Now let's go quickly on oil. We've been looking at this as a wave 4, right, ending with an ABC correction, a simple zigzag. Now we've done waves A and B. It looks like wave 5 ended as well up here because we had a fresh high, but I'll be honest, I don't like these structure here for an impulse to the downside. So we could have 1, 2, This could be an ABC 3, then 4, and then 5 for an ending diagonal, right? Which means we are likely to remain between the 31 and 42 area for a while. But most importantly, below the 42.33, right? Because this is the gap low of, well, it's, what was it? March, right? So the gap has been filled. Now, if we don't reverse down, it means that we are going to break high. And this is where we're going to have to look at this with a different eye, which is 1, 2, then wave 3 is going to be obviously higher. This will be considered as a leading diagonal, wave 1. Then we're going to get 2, 3, 4, and 5 to complete wave 3 of this degree, then 4 and 5, right? So we are looking at over 70 levels in this scenario. Now, if we break below wave 4 and then wave 2 over here in wave B, then most likely we're looking at this being a wave 5, and that would suggest that indeed we're in wave 4, but wave 5 is likely to be truncated, because I don't think we're going to see a minus 40 again, to be honest, right? Now, quickly on natural gas. In natural gas, we talked about this opportunity being a flat, right? An expanded flat. So waiting for wave 4 and then wave 5. We were down here, if I'm not mistaken, like a week ago or so. So we're looking at this being a wave 1, a very nice wave 2 down here with a consolidation to the bias to the downside. Now we've had leading diagonal 1, 2, we're in the midst of wave 3, okay? We're gonna see 1, 2, 3, 4, and 5 for wave 3, then 4, 5 for minor 3, then 4, and then 5 again for minor 5, which is also the end of the expanded flat in wave 4, and then prices will start moving lower once again for fresh lows before below the 1.4. And last, let's have a quick look on silver as well. We're expecting silver to end its last move around here, right? Actually below, it was below the 20 level, if I'm not mistaken. Because I'll be honest, I wasn't expecting the first attempt to 20 to break to, like, you know, to the 26 or so, which was also the 400 Fibonacci extension of waves 1 and 2, right? So anyway, we reached that level, which makes this very, very impulsive, but we have to expect now a correction. If we take the Fibonacci retracement, we can go anywhere between the 1890 and 2280 or so. The lower, I mean, we've done the 22 actually, yeah, consider that an error. We've done the 22 already, okay? So we're expecting an ABC, and then 1, 2, 3, 4, and 5, anywhere between the 18 and 20. We could perhaps go lower, because we might want to take wave 4 out, which is between, well, it should be actually around the the Fibonacci retracement of 61.8 between, yeah, okay, it's very near to the wave 4. So I'm expecting prices to move lower, and then once we go down to any of those levels, start seeing some signs on the market on the other side, I'll be looking for prices to start moving higher in the longer term as well. Probably looking at levels over the 40 barrier in the longer term. So this will be all for the day. Thank you very much for watching, and we'll speak again tomorrow.